Okay, welcome everybody. Let's move the camera over here. So I should be popping up a live stream here. So for those of you on YouTube, welcome. And for those of you on GoToWebinar, welcome. Isn't it exciting to have this technology where we can broadcast to a wider audience around the world now too. So the VectorVest Stock Health Clinic. So we're going to look purely at Australian stocks today. We did this last week. We did this exercise last week and we did it in a lot of detail. Today I'm going to be a lot shorter. All right, so I'm going to refer you on to the YouTube channel where you can see this in a lot more detail what we did. But this time around, for those of you that just want to get quickly to the answers, quickly, don't want to spend a lot of time analyzing your stocks each and every day or once a week, or once a month, whatever it might be, I'm going to show you a very quick technique to do it. If you want more of the nuts and bolts, if you want further analysis, maybe at the end, if there's enough demand at the end, we can stay on and take it to a more technical level. But just to let you know here, let's move this across and show you. So if you go to the VectorVest Australia YouTube channel, and you can see the one that we ran last time. So this is one broadcasting live now, but VectorVest Stock Health Clinic 4 days ago. This one went on for just an hour and 49 minutes. So if you get the chance, have a look at that one there. It's in a lot of detail. So we do exactly what we've done today, but take it to a lot more detail. Just before I get going today as well, I've got two special things for you. So if you're new to VectorVest, let me know there in the chat box on YouTube and on GoToWebinar. Let me know in the chat box, are you new to VectorVest? All right, so today's aim is primarily helping those that are new to investing or new to VectorVest. At the end, of course, I'm happy to get into a lot more detail should you choose, but the key theme today is to keep it nice and simple to show you just how quick and easy it is using the power of VectorVest. You don't have to spend hours behind your computer analyzing your stocks. But I've got two good things today for you. I've got a link to a 30-day trial at the end, so if you want to analyze your stocks further and want to trial out the power of VectorVest, well, we're new for 10 bucks US, call it 13 Australian dollars, then we've given you a link there so you can trial out for 30 days. And I've also given you another link. I'll give you a link at the end today. So I'm incentivizing you, please stay to the end. It's worth watching this exercise. At the end, I'll give you another link to a 5G stock report. All right, so we spent many hours researching some of the best 5G stocks. And, as you know, 5G is the up and coming new technology with what's happened with coronavirus. A lot of us now work from home. Right, there's been a shift from working in sort of corporate offices towards moving more towards sort of working from home type setup. So all the more importance of 5G, it's sort of expedited that importance. All right, so I want to give you that report. Stay to the end. I'll give you a link. And you just give us your email address and we then email out that report to you. It took me about 25 hours to put that report together. I turned just about every 5G stock there is out there and looked very, very carefully using much a similar process to what we're covering today. Okay, so with that said, let's transition across. You've seen me on camera. I'm broadcasting live from the beautiful Queensland location here in Australia for our international guests, Queensland in the Sunshine Coast. All right, so there we are, small worlds. Let us know, where are you? Where are you logging in from today? I see we have a few international guests and quite a few Australian guests too. Tony notes there in the comment section there, newbie. Welcome, Tony. I hope you get a lot out of today's session. All right, so without further ado, let's do this. Let's bring up VectorVest and I'll fire up Australia and bring Australia over. All right, so this is the welcome tab when you first log in to Australia. And what I want to do here today is I want to build us a great set of stocks. All right, so at the end of the day, I want to take all of your stocks and then I want to whittle it down to the best performing stocks out of that group. Now, it takes very little time once you understand how to do this. So it's not going to take you a lot of time. All right. And often you'll find we'll have a list of 30, 40 stocks. And guess what? It'll be whittled down to 5 or 6 stocks in some cases. I think last time we ran the exercise, we got it down to 4 in total. Right. So if you're one of those that have given me one of those 4 stocks, hats off to you. You've picked a very good stock. But you know what? I'll make you a stock picking wizard today, just with some basic techniques. Very powerful techniques, but not hard to carry out. And you know what? It's fun to do. That's the key thing. It's fun to do. All right, so I've clicked on viewers in VectorVest, and I'm going to click on a new group. All right, so new group effectively is our way of saying a folder. Effectively, you call it a group. In Windows terminology, it's a folder. Okay, so what's the date today? 16 December. Time flies, doesn't it? All right, so 16 December 2020, and click add. Okay, so I've now created that group, and within the group I'm going to create a watch list. All right, so a new watch list. All right, so I'm going to give it a name here. Let's go 16 December 2020 audience list. All right, so at this point here, this is where I'm going to ask you guys to help me populate some wonderful stocks. All right, the good, the bad, the terrible, the excellent. All right, you give us what you want us to populate. All right, if you don't know the ticker code, I mean, if you know the ticker code, great, give us a ticker code. If not, don't worry, just give us the name. I'll look up the ticker code. You don't need to know the ticker code. So for example, if I didn't know a stock that began with the letter COM in the name, I just simply type in, say, COM, and then VectorVest will prompt you, well, is it Commonwealth Bank, Computershare, etc., etc., etc. All right, you go, oh, hang on, yeah, it's this one here. That's what I was after, Computershare. Oh, there's a ticker code. I can just simply click in it, bang, and it puts it into the list for me. All right, now, leading up to today, actually, you know what I'll need to do too? I might be hiding that because it would have been difficult to see with my image over it. So I created the group 16 December, all right, and I've created the watch list within that group, right? So all I did is create a new group, gave it a name, 16 December, and then once I created the group, I then just created the watch list to house within the group, okay? So there we are. It should be nice and big and easy to see now on your screen. I've created the resolution to a suitable size too. So if you're watching on a tablet or an Apple iPhone or Android, you should be able to see this hopefully quite clearly too. All right, now in come the shares. So I've had a few emails leading up to the presentation today. So quite a few of you have emailed me through. So I'm going to start populating in these ones here. There are a few that you were concerned about, so I'm putting these ones in and keep them rolling in. All right, keep them rolling in. Let's see, Mark notes, logging in from my bed in the UK. Welcome, Mark. Yeah, I'm not sure what's the time in the UK at the moment. We're totally the sort of the opposite end of the world, right? So it's probably your night time. It's our daytime. So welcome. Thank you for logging in today. Isn't technology amazing? All right, so MQG, Westpac Bank, that's one of our big top 5 banks in Australia. Petrol, PPT, there's another one that coming through early in the day. CCP, Flight Centre, what a torrid time. The airline and related services to travel has had this year, and for our VectorVest subscribers, and of course for everybody internationally, because you've got access to all the countries now with VectorVest. If you're interested in stocks related to the travel industry, have a look this Saturday in the VectorVest Views, our VectorVest Views weekly essay. I have written an essay on travel stocks. Something very interesting starting to take place. They've had a torrid time, but not since the last 2 or 3 months. Big turnaround starting to take place. Right, Australia is now COVID-free, at least local transmissions for now, touch wood. All right, a few people willing to venture out to the airports again. Whoop, JB Hi-Fi, we've got that one in. So it'll be interesting to see what happens. All right, AMP, another stock's had a tough time. Aristocrat, all right. Yep, another one coming in. FMG, Min, all right, so these are the big performing mining companies. SAR, ASB, all right. ZNO, Zoom Technology, I think it is. Interesting one. That one, yep. ANN, Elders, popular one there in Australia. OBL, right? So I'll just push enter, so it'll just start populating it. All right. We'll get into what this all means shortly. ADH, all right. Another one here. VMT. PPE, AVA. Okay, right. So those are the ones that have come in earlier via emails. All right. Now, coming through in regards to the questions coming through. Let's see here. Okay, let's see. Sorry, for those of you on GoToWebinar, thank you for pointing that out. You noticed that your screen was locked. There we go. Should all be coming through. Look, you haven't missed out on anything. All I've done here, gone to viewers, I've created a group. All right, so in viewers, created a group, gave it the name there, and I gave the name 16 December 2020. And then once I created that group, I then created the watch list within that group, and I gave the name 16 December 2020 audience list. And all I've been doing here is populating in under add to put in the stocks. Thank you for noting that. Sorry, I hadn't picked that up earlier in the comments. I think everyone on YouTube's okay. Everybody on GoToWebinar now should be okay. My apologies for that. All right, should all be going through. Let me know in the Q&A box. Yes, are you all okay? Okay, good. Right, we'll keep going. All right, so next one here. So AVA coming in through here. Gail via GoToWebinar is, no, you'd noted there. Ray had noted at TGR. All right, CGF, ALD. I think we've got that one, have we? ALD, thank you. Wes. Oops, ws.ax. I'm putting in .ax to denote it's for Australia. All right, ccp.ax, comma. Okay, so thank you for those additional ones coming in here. All right, so I'll fire those up and load those two up. All right, anyone else? Thanks, Kerry. Yes, and I see you're back. Sorry for the screen freeze there earlier. All right, so NAC, I was worried I might have turned you away. All right, so thanks for your perseverance. You've come back. It's all working well again. Okay, so NAC, Kerry had asked there as well. All right, what do we got? We got 31 in total. Any other takers? All right, so I think we've put in quite a few from the audience. Anyone else from around the world? Look, even if you don't know the ticker code, don't worry. You don't need to know the ticker code. Are there any Australian stocks that you're interested in? You know, yeah, I see a few coming in from YouTube here. BHP. You know, BHP is not listed, not just only in Australia, but it's listed in the UK. I think it's listed in the US, on the US stock exchange as well. All right, so yep, so our big miners, a few of you asking, yep, you know, these names most likely BHP and Rio, some of the biggest miners in the world. Okay, so I'll fire those two in as well. So thank you, Ron, via GoToWebinar, noting Woolworths. Yes, Woolworths had done well during the pandemic. A lot of food sales took place. Coles Group, let's throw in Coles, one of our other big food providers here in Australia. Right, so Woolworths and Coles are some of our biggest providers here in Australia for food. There has been talk by analysts saying, you know, it's too much of a oligopoly, duopoly, quadropoly, whatever you want to call it, you know, for 4 or 5 different sort of, or 3 or 4 major players with our food. Maybe we should be having them diversified further. We shouldn't just have it in the hands of 3 or 4 big players. And then there's other analysts arguing, well, it's economies of scale, they can do things cheaper. And there's other analysts saying, well, really, if you've got the market cornered, why wouldn't you maximize profit? So interesting one on the food group companies there. Thank you for that, Ron. All right, and let's see, yep, another one coming in, Oz Minerals. Yeah, interesting one. I owned that stock many years ago, made very good profits out of it. If I'd hung on to it today, well, I just don't really want to talk about it because I would be up another 8-9 fold, but nonetheless, it was a very good company. If I had VectorVest at the time, I would have hung on to it. I would not have used the emotion to get out. All right, so there we go, OZL. All right, so what do we got? We got 36. Now, if there's any more from you from around the world, let me know. I've got no problem. I can populate it in again. All right, so it's not an issue, okay? So on there, I'll just transition it just so you can see me just for a sec here on the screen. All right, so we've got a list of 36, and I'm just double checking on all the different feeds coming in live. I think we've got everything for now. Don't worry, if you've thought of one and you need one, just shout out, put it into the chat box. I'm scanning the chat box, and I'll quickly pop it back in, another one in. Okay, so what I want to do now is I want to show you an incredibly simple technique. All right. The temptation here is to get into a lot of definitions behind the key indicators in VectorVest. If I scroll over here, there's a lot of them, right? We got a lot of really powerful indicators here. We take the data and we turn it into valuable information for you. I don't think it's going to be the best use of your time if I were to go through each and every one of these indicators. All right, it's kind of like, you know, driving a car. I don't need to understand internal combustion engines and understand pistons and whatever have you, and spark plugs and cylinders and gearboxes and gear ratios. All right, all I need to know is how to drive it. How do I drive a car? How do I make money? That's what I want to know here. How do I make money using the power of VectorVest with this list? Okay, so let's do this. I'll transition over again, so just to maximize it here for you. All right, so I've transitioned it over. So this is how we do it. Each and every day at VectorVest, we'll take your stocks. All right, we'll take your stocks if you want to do it via a watch list method. We also give you all the stocks that we track in VectorVest, and we analyze, rank, and sort them. And what we do is we put the best combinations of fundamentals and technicals at the top of the list. All right, that's what we do. So the best one there is Fortescue Metals. Whoever gave me Fortescue Metals, well done. You've given me one of the best companies currently, believe it or not, in Australia from a fundamental and technical perspective. If I was to graph the stock, I'll show you why. Look at that. All right, if I pull this back just a wee bit more in time, don't worry about this for now. Look at that. You know, you would have bought in, let's say, potentially here, $2. It's now $21. All right, who needs Bitcoin? You've got Fortescue Metals. It's gone berserk. All right, so that's something you can consider. But if I come down to the bottom of the list here, all right, IDP Education. All right, this one here is struggling. It's got the worst combinations of fundamentals and technicals of all the stocks you give me in the list. And it's not too bad considering, you know, if this is the worst, but it's very volatile, and the trend has been sort of all over the place. It is up nicely though. I mean, you know, going back 2 years ago, 14, it's at 20, so it still went up. But it's not a particularly happy stock in terms of its volatility. Okay, so putting that all together here, how do I know the best combinations of fundamentals and technicals at the top and the worst at the bottom? We rank and sort our stocks by this indicator here, VST, value, safety, and timing. So it looks at the combination of both fundamentals and technicals. Okay, it's on a scale of 0 to 2. So the higher above 1, the better. So if I go down to the bottom of the list, you'll see here the VST scores start breaking down. All right, you can see here they start to break below 1. I must admit the stocks you've given me here on average are pretty good. This is not too bad a list. I've seen much worse with much lower VST scores. But the best combination, fundamentals and technicals at the top of the list. All right, so what does VST comprise of? Your fundamentals are RV and RS, again on a scale of 0 to 2. So those are your fundamentals. I'll explain those shortly. And RT is your short-term price momentum indicator. All right. So when we say fundamentals, we're talking about building blocks of those companies. So the first one we look at for fundamentals is RV on a scale of 0 to 2. What's the long-term price appreciation potential for a given stock? The higher above 1, the better. That's all you need to know at this stage. The higher above 1, the better. So Fortescue Metals got a very good long-term price appreciation potential compared to, come down to the bottom of the list, IDP Education's got a very low long-term price appreciation potential as it stands. Why might that be? Compare the price to the value. So price of $20 odd, value just shy of $3. There is a fair amount of premium being paid for this company. So we advocate at VectorVest to buy undervalued stocks, safe undervalued stocks rising in price. Now, this company here is not undervalued, right? It's overvalued quite significantly. We're not saying rush out and sell it if your company is overvalued, but we're just saying be careful. This indicator here, RV, is more important than price compared to value because it's looking at the long-term price appreciation potential of those given companies, right? So in this particular case, IDP 0.17. Right, there's a lot of mathematics that goes in behind it. All right, if you get stuck with any of the definitions, right click any stock, and you can view the full stock analysis report. Let's fire this up just to show you. So you might want to do this for each and every stock that you're considering. All right, you can read up about them. You don't have to print them all out. You can print them all out if you wish, but you can go through and have a look. So it gives you a great write-up as to what the business is all about. And you can see why this company is struggling. It engages in educational businesses, educational business, and it has a lot of clientele from around the world, including Asia, Australasia, Bangladesh, Cambodia, China, Hong Kong. What's one of the problems that's been occurring with education providers this year? Yeah, you've got a lot of the attendees have not been able to attend because of restrictions, lockdowns, flight restrictions, international travel restrictions. All right, so Australia's international education business, a big component of our GDP. It's one of our biggest businesses here in Australia. It's in our top 5, I believe it is, along with mining. All right, so it's right up there, along with housing, of course, like in many countries around the world, highly dependent on the housing market success. All right, education's a key prong in Australia's GDP. It's been hit a bit this year because of the restrictions in international travel. So nonetheless, so right-click, view full stock analysis report. All right, and then if I scroll down here, you'll get the definitions. All right, so RV, look at this, very poor, red dot there. All right, saying be careful. RV is an indicator of long-term price appreciation potential. IEL has an RV of 0.17, which is very poor. This indicator is far superior of a simple comparison of price and value because it's computed from the analysis of projected price appreciation 3 years out. It looks at things like AAA corporate bond rates and risk. All right, again, I don't want to get too bogged down in the nitty-gritty. It's all there for you when you want to drill into it. But the analogy going back to driving a car, I just want to know how to make money in the market. I just want to know how to drive the vehicle, right? So would I want to rush out and buy this? Well, price of 20, value of $2.97, bit of a premium there. And then I look at the RV and go, long-term price appreciation potential is limited. I'd much prefer to be at the top of the list where I have a company like, say, Fortescue Metals. And again, please, I'm not licensed to give advice, so please do speak to your financial advisor. But a price there of 21.48 versus a value of 39. I prefer to have an undervalued company with good upside potential, 1.77, so well above 1. All right. The next one here, that's a fundamental indicator, is RS. Right? It's how safe are your stocks. So it's looking at the consistency and reliability of companies' financials. So if your company has a good set of financials over the years, a reliable set of financials that doesn't fluctuate wildly or upset investors with sort of curveballs that come in and go, oh, hang on, what's just happened to the balance sheet, or what's just happened to the statement of cash flows, it's deteriorated significantly, or what's going on here. If it hasn't got any of those sort of nasty shocks coming through, all right, it's going to get a good RS score. Now, Fortescue Metals, a good set of financials. Now, prior to VectorVest, I used to pull financials to pieces for a living, right? So I'd look at income statements, cash flow statements. We'd calculate NPV values on expected future net, that being net present value calculations on future value of companies, depending on all sorts of variables and inputs. All right, I don't need to waste all my time doing that anymore. VectorVest does it for me. It's telling me how safe and reliable those set of financials are right now. Fortescue Metals, very high score, 1.38. Come down to the bottom of the list as the fundamentals and technicals deteriorate. There's IDP again, McPherson's, Woolworths. These are below 1. So these companies' financials as they stand right now are not as strong as the financials here. All right, so I want that RS score to be as high as possible. In Australia, same as for the US as well, if you can find relative safety scores of 1.4 or better, then you've got a very, very strong company from a financial perspective. 1.4 is excellent. So Fortescue Metals is just shy of excellent. Mineral Resources, very strong there at 1.32. Oz Minerals, nothing wrong with that, 1.24. Look at that. SAR, 1.37, 1.28. Very, very nice RS scores here. Okay, so this is looking at your fundamentals, RV and RS, upside potential, and how safe those financials are. Moving over here, RT. So I'm just about done with the definitions. I'm just going to give you some of the key drivers behind what goes into VST. It's not just good enough to have a company that has good fundamentals. So fundamental investors will say, well, this company's undervalued and therefore it should be worth a lot more in the years to come. They're looking purely at the fundamentals. A technical investor will say, look, I'm not cared about the fundamentals. I just want to look at the price projection as it stands right now. Where is this company likely to be heading in the short term? So it's looking at momentum. So if you've got a strong RT score on a scale of 0 to 2, the higher above 1, the better. It's telling you that that company's got good upward momentum. So if I look here, Credit Corp, look at this, 1.61. Let's do this. Let's graph this company. Forget about the fundamentals for now. See, it's going up. I've drew a line on there, analyzing it the other day. It's breaking out. Here's your technicals. Look at this. So on a scale of 0 to 2, I'll make this jump out just a tad more for you. All right, there it breaks above, it sort of broke above 1, then took a rest, broke above 1, took a rest, broke above 1 this time, and is now hitting good higher points here. Let's zoom it in just a tad. All right, breaks above 1 around about here, price at 19, price now 24. So the technicals have zoomed up. What if we could get a company that's got good fundamentals and good fundamentals and technicals? Well, that's what we're doing with the VST score. So we're putting the RV, RS, and RT into one master indicator being VST. It's not just these three divided by 3. A little bit more of the weighting goes into the technicals, but a good chunk of the weighting goes into the fundamentals as well. Okay, so RV, RS, RT, there's your VST score. So let's do this now. Let's grab, say, the first 2 or 3. Right, so these are top fundamental and technical companies. So here's our technicals. Look at that, breaking above 1 there at 103, 16 bucks up to 21. So I'm wanting to buy companies as the technicals start ramping up. Here, it broke above 1 and held up nicely. And then it came off. So it went, you would have gone in, say, $10, and there it had a bit of a breather and got out at 15. Thank you very much. Nice 50% return. But as I noted, technicals or fundamentals on their own are not enough. So here are the fundamentals for you to have a look at. Now, the RV and RS, upside potential and the safety and reliability of those financials for a company, you can do a lot by looking at this earnings score here, EPS. So if you want a nice, simple way of picking some good quality stocks in VectorVest, this is what I'm looking for. I'm wanting to see that my company is growing its earnings year in and year out. Because when the company is growing its earnings year in, year out, that bodes well for future price appreciation potential. Mark my words, rising earnings, you'll see this time and time again. Rising earnings, rising share price. It's as simple as that. So if you can pick on those companies that are growing their earnings year in and year out, and where the technicals are moving up in price, you've got your fundamentals firing up, you've got your technicals firing up, put the two together, boom. That's how you make money. You're buying into companies that are growing their earnings as they move up in price. You'll get companies that are growing their earnings where the share price is having a breather. Right? Wait for it to resume for the technicals and buy into those companies growing their earnings when the technicals are firing up. Right. So let's say that this is our list as a stock sort of investment club. Let's pretend this is our list. And we have to go back to our managers at the stock investment club. Let's say there's a board of directors or whatever it might be, and we have to whittle it down to the final selection. So the board of directors come to us as a stock investment committee and said, look, we've got a little bit of a mess here. We've got a portfolio that's kind of all over the place. There's a few that we should probably consider removing. What should we do? All right, so ultimately you can be your own fund manager, your own investment expert using VectorVest. So I'm going to teach you the techniques. So I've given you some basics here. I'm going to teach you the techniques to analyze your stocks. Don't worry about all these other indicators for now. We'll get into those if we get a chance at the end, but I want to show you how you do it. So if you're new to VectorVest, create a watch list, populate your stocks in, and then follow this process. All right, before I get going, I want to look at the entire overview of what you've given me today. So you give me 36 stocks. I'm going to go down to the bottom, right click, view average watch list graph. All right, I'm going to go back 5 years. Just on that, I'll show you what I did again. So down to the bottom here, watch list average, anywhere down there on the average, right click, view watch list average graph. Okay, so that's all I'm doing here. All right, so view watch list average graph, and on here, there's the one that we spoke about today, earnings and the technicals. I'm going to go back 5 years. All right, so the earnings are not too bad. You've given me some very good stocks on average. Yeah, I could tell because these two scores were pretty strong on average, but quite a nasty drawdown here during the coronavirus market sell down. Technical's actually been pretty good apart from here. All right, so that's our starting point. Can we improve it? Can we make it better? This is not bad at all, right? But nonetheless, let's make it better. All right, so there's your list that you've given me. Okay, and what I'm going to do here is I'm going to make a copy. Right click, copy. I'll make a copy here so we can compare to what we have and compare the final result. How about that? All right, so I've made a copy. So you can just remember roughly what our total overview was. Wasn't too bad. It's pretty strong. Let's improve it further. So how do we do it? This is how I'm going to do it. First step. Have a look for the companies that are being dragged down. Remember we spoke about short-term price momentum. All right? So it's looking at the short-term price momentum taking place. Now, if you've got RT scores, come in here and remove anything where the RT score drops below 1. It's telling you your short-term price momentum is starting to go against you. So I'm going to click on the first one, hold my shift key down on my keyboard, click on the last one here, and I'm just going to graph those selected stocks. All right, once you get to grips with VectorVest, this is easy to do, so don't be put off by this for now. It's really easy once you get a chance to play them. All right, notice what's happening here. So if I'm looking at the current sort of trend of these stocks, it's coming down, right? Technical's gone below 1, price is coming off. All right, next one here. Well, technicals here are falling very quickly, price is coming off, right? Why hang on to these stocks if they're starting to drag your portfolio down? They've had very good runs in recent times, but now it's probably time to part ways with some of these stocks and wait until the tide turns around again. All right, look at that one there, Elders. You've had a falling set of technicals for quite some time, and that's starting to weigh in on the share price. All right, this one here, it's been quite obvious for quite some time. All right, so you're looking at these saying, yeah, I can see this, but a lot of investors just lack the ability to pull the trigger and say, well, actually, hang on, I need to sell it, because our emotions get trapped within us, right? We say, well, I can't sell that one. I bought this one at $10, and even though it's 17, I still want to hang on to it. But why? If it's going to go down to $7 or $8, why would you still want to hang on to it? I don't know where it's going to end up, but you've come off from 25, you're down to 17. How much more pain do you want to wear? The technicals are telling you to be careful. All right. You can always buy back in. Right, it's this one here too. Look at that, technicals falling away. So you get the idea. These are the stocks that are dragging your portfolio down currently. Right. So this is the power of being your own fund manager, right? Your own having the power of VectorVest. Here, where the RTs are all below 1, I just simply say, you know what, that's it, I'm out. Unlike, say, real estate, where it could take months and months to sell a property, and you've got to go through all the rigmarole behind, the conveyancing and the real estate agents and all that type of stuff. You can do this in a matter of minutes. All right, call up your broker, or if you're online on a trading platform, it takes you just a couple of seconds and you can sell them out, right? So let's go and have a look at our bottom line. So we've removed all the laggards out of our portfolio for now. How's this sort of stacking up for now? Let's go back 5 odd years, put on the earnings again, and let's see. All right, so we're starting off here. Well, yeah, it's not really too much of a change here. We've still got a huge dip there that's concerning, in the fact that we're holding a few stocks that might prove very volatile based on past performance. All right, so it's a starting point. We've improved our technical scores. We've got nothing below 1 now. All right, well, that's a good start. Let's keep going. The other point I'd noted today is we want to make sure that our earnings are growing. All right, so if you look here in recent times, all right, so we've worked on the technicals. Now we're going to start working on the fundamentals. What's concerning me a little bit is the earnings have been falling for quite some time. We're just starting to see a turnaround again, but in recent times, I don't know whether some of these companies necessarily have had some of the best earning profiles out there. All right, there's a few question marks. I want to improve that. You know, can we improve that? Let's zoom it in here. I just want to bring it in a bit. Can we improve this sort of slump? Can we find better long-term earning profiles? You betcha. All right, we're going to do it. So the indicator I want to pick on here is this indicator here called GRT, earnings growth rate. Right, so this is what the company is looking to grow its earnings by. Look at these earning growth rates here, 33, 29, 28, 27, 17. These are excellent earning growth rates, but as you start coming down here, you go, oh, 1%, that doesn't really keep up with inflation. Well, it's debatable. Inflation's a bit of a tough one to achieve at the moment here in Australia and around the world. All right, but here, this is definitely a concern. -2, -3, -4. Why are these companies not looking to grow their earnings? And we know that if a company can't grow its earnings, then that company is going to be under financial pressure and its share price will fall. All right, so here, if I look at this one here, Flight Centre, our industry here behind, travel, right? Flight Centre booking all those flights. It's understandable why this has had a tough time. AMP has been in the news for all the wrong reasons in recent times. All right, they're under a lot of pressure at the moment, right? So their earnings growth rate is under pressure. Right, so you can see quite a few of these companies here where the earnings have come under pressure. Well, what about this? Let's just say, you know what, we'll have a cutoff point. Anything that's negative, we'll just remove it out. So there we go. Now, if you're having difficulty selecting these negative earnings growth rates, and you're looking and going, oh, but Aristocrat, I just can't get rid of that stock, or oh, there's Coles, Wesfarmers, or Macquarie, I just can't bring myself to doing that. Just remove the columns or hide them. So you can just squish them up. You know, just what I do. I just, I'll just simply, let's do this. I'll squish it in. Right, I can just do that and then hide it. All right, so I could just do that all together. All right, so there, it takes away some of the pain. Then maybe you'll recognize it on the price, so maybe you'll need to do that as well. And then you come through here and you start to pick in your GRT. All right, that's another way you can do it. Another way you can do it is right-click any stock, click on Layout, and you can then come on your Layout selection here and remove things like price. You just move that over and it'll pull it back into here where it's not going to be displayed. This is what gets displayed. This is moving over parameters to be displayed. So you can go and hide these. All right. So if emotion's getting the better of you, where you're going, oh, I just can't bring myself to sell Credit Corp, remove those columns and then do this exercise. All right. So our first exercise was RT, removed anything where the RT was below 1. Right, the next exercise is GRT. We are removing anything where the GRT, right, where the GRT is negative. Right, so I'm going to click on the first one here, go down to the last one here, hold my Shift key. There we are. I've selected all the negative earnings growth rates and click on delete. Gone. Right, they're out. Right, so I've cleaned up the technicals. I'm cleaning up the fundamentals. Let's go and double check down the bottom. Right, click, view Watchlist average graph. All right, and let's just clean the lines up, take those off. Ah, much nicer earnings now, isn't it? All right, go back, say 5 years. Look at that, the drawdown there is not quite as severe as what it was originally. So this is starting to look like a much better profile. There's still a little bit of weakness here, but the earnings are textbook, and those technicals are nice. Let's put in that GRT indicator. Add parameter, capital appreciation GRT. Right, so the earnings growth rate, look at that. These companies on average have an earnings growth rate forecast at around about 17%. Wow, and look at the earnings. Right, so can you see how easy I've kept it? All right, so just to speed it up, you know, I needed to work through carefully with you guys to show you, but to speed it up, to sum up what I've done literally in 2 minutes, it would be populate your watch list, sort of by RT, remove anything with RT below 1. Grab your GRT column, remove anything below 0. That's it. Right? It would take you just a couple of minutes, right? There we go. Now, the last thing I'm going to do is I'm going to pick on RS, relative safety. Relative safety. Now, relative safety is on a scale of 0 to 2. Again, right? So it's looking at how safe and reliable those companies are. Now, again, if you can't bring yourself to removing out certain companies because you have emotion attached to those companies, again, hide those companies. But the question I've got to ask myself is, why do I want to be hanging on to companies where relative safety is below 1? Now, Rio Tinto is doing a great job with its earnings at the moment. It's growing rapidly on its earnings, again, thanks to iron ore spot prices, etc., etc. So this is certainly a company I'm interested in, but right now I'm after some of the safest companies right now. I can always buy back in once I'm happy. So it's up to you how strict you want to be, but I'm going to take this and remove anything where RS is below 1. There we go. Come down to the bottom of the list again, view it. I've really polished up the fundamentals and the earnings. I'm going to come back to 5 years worth. There we go. Okay, now looks pretty good. Great set of earnings, rising portfolio. Right, that's rising earnings on the portfolio. And there we go. Those are the ones that jump out to me. Okay, so in terms of all the stocks you've given me, 6 in total. Look at that. They're all either buy or hold rated. Now, you would have seen earlier some sell rated stocks. Sell rated simply is where the price has gone through the stop that we calculate each and every day for our stocks. All right, it's a 13-week moving average adjusted for the fundamentals IV and RS to give us our stop calculation. So where companies have lousy fundamentals, all right, and the stock is starting to break down a price, the price will break through the stop and it'll be a sell rated stock. All right, so you'll see over here, none of these are sell rated, either buy or hold. To get a buy rating, your VST must be above 1, your RT must be above 1, and price must be diverging away from that stop price. So you see here, we either buy or hold rated. This one here, JB Hi-Fi, why is it hold rated, not buy rated? Just to show you, if I put in the stop, right, so at the moment I'll zoom it in, you see the price is starting to converge towards that stop, just on a pull away again, but on average, it is converging towards the stop. All right, that's why it's given a hold rating at the moment. All right, it's been bouncing a little bit in and out of its stop there. It's got a sell rating here or there. All right, but you'll see the earnings still powering on, still stacking up pretty well. It's under a little bit of pressure. All right, so do you like the look of this profile? So there is the profile. That's what I'm trying to achieve at the end of the day with the Stock Health Clinic, to get this all lining up. All right, so take a look at this. This is what we've done with cleaning up those stocks. We whittled it down to 6. I'll show you what we started off with. Here we go. Right, what we started with was pretty strong on average, but what we've got now is much stronger. So that's what you gave me to begin with. All right, much more volatility here. Technicals a bit more rugged, and the earnings not quite as smooth as what we got now. So that's what you gave me. Let's go back here. Let's double check again. And this is what we've got it to look like. Here's the 5-year, right? That's it. All right, so we've made it stand out a lot more. Now, what I'm going to do here is I'm going to show you 4 steps now to protecting your profits. 4 steps to protecting profits. So you've got these 6 stocks. At what point would you sell out? Because you don't want to let some of these stocks go, and start dragging your portfolio down. What do you do to protect yourself? Now, I'll go to the original list you gave me, and I'll pick on, IDP again, education. And I'm going to show you what to look for, to be careful about. Straight away, I don't like the falling earnings. The technicals are pretty awful at the moment. They're starting to really deteriorate at a rapid rate of knots. I'm going to show you what we're going to look for to protect our profits. This is what our founder, Dr. Bartolito, has taught us, right? This is what he teaches us. 4 steps for protecting profits. So on your graph layout, you want to make that the VectorVest layout, right? Graph layout, VectorVest layout, and it works as follows. Here are the 4 steps. I'll zoom it in just a tad. Step number 1, price and direction going against you. Right? Is that being met at the moment? Are you starting to get price direction? Is there volatility? Is it starting to go against you? Yep. Step 1's being met. Right? Step number 2, price goes through the 40-day moving average. So on your graph layout per the VectorVest layout, all right, there we've got a 40-day moving average on the price. Yep, price has gone through the 40-day moving average. All right, step number 3. Relative timing goes below 1. Our short-term price momentum breaks down. Yes. Now at that point, I often say 3 strikes, I'm out. I can always buy back in. The 4th and final strike, which hasn't occurred yet, is your rating goes to a sell. So rec equals sell. Now that hasn't quite occurred. It has occurred on this one up here. So let's graph this one here. McPherson's, let's go through the 4 steps again. Whoa, this one here is really starting to go against you. All right, let's run through the 4 steps again. Price and direction going against you. So volatility and direction, yes, around about here. It really starts falling away. Around about here, you see it starting to drop off quite quickly. So step 1 being met there. Step 2, through the 40-day moving average. Yep, smashes through the 40-day moving average. Step 3, RT below 1. Yes, just broke below 1 there. And we can wait until step 4 if you want. Rec equals sell. Now at that point there, what are you still doing, as I found a note there? What are you still doing holding on to that stock? All 4 steps are against you. There it was. It lit up like a Christmas tree. There it is. All 4 steps. What are you doing? Price at $2.64. The price now at $1.35. Ouch. Why give away all your hard-earned profit, if you were up in profit, back to the market? Oh, you know, I'm a long-term investor. I don't believe in stop losses. You know, I buy and I hold for the long term. I can assure you, based on numerous back tests, for many occasions, that doesn't work out too well. You do need to be a little bit proactive, but it depends on the type of stocks you're going after. You don't need to be in and out all day, every day, certainly not. But why give away all your profit back to the market here? Okay, let's go to the list that you've given me. All right, so that we polished up. Let's run through the 4 steps here. So let's graph them all. All right, so I'll just graph all. Let's run through the 4 steps here. This will give you some confidence in terms of what you've got now in terms of your shortlist. All right, let's run through the 4 steps. Okay, here we go. Step number 1, price and direction. Well, it's starting to have a little bit of a pullback here, so I'd have to say that that's step 1 is being met. Just sort of starting to sort of kick in there. Debatable. A few of you might say no. A few of you might say yes. Let's say for argument's sake it's a yes. Right, step 1's being met. Step 2, above 40-day moving average, no. Step 3, RT still above 1, so that's not being met. And step 4, rec equals buy. So only one of the 4 steps. So this one's looking pretty strong still. However, this one here, oh, it's having a bit of a breather. Okay, so it's come off. Yes, definitely step 1. Not step 2 just yet. Quite a way off step 3, and rec equals buy, no. So 1 out of 4, that's still looking okay. Next one, Oz Minerals, having a bit of a breather there. Step 1's being met, not step 2, not step 3, or step 4. So that's fine. This is your weakest link so far. Step 1, definitely. Step 2, just squeaking through the 40-day moving average. Price 63, 40-day at 65, so it's just gone below. All right, step 3, RT. No, it's still strong at the moment for now, but we need to keep an eye on it. So this has got 2 out of the 4 steps. And as I personally, I say to myself, three strikes and you're out. So for me now, I'm going to be waiting. Either that's going to light up to sell, or RT goes below 1, and I'll be moving to the sideline. So that's my weakest link at the moment. Right, next one here. This one here. Price and direction certainly going against you. Step 1's being met. Step 2, whoa, what's this one here? 46, and the MA at 46. Have to look at the decimal places now. 0.2. 0.7. All right, so step 2 has been met. Looks like it's about to come back up again, but we don't know. 2 steps are being met. All right, so price and 40-day moving average. Step 3 is okay. It's above 1, and you haven't got a rec equal sell. So this is 2 out of the 4. So this one here is another one that I need to keep a close eye on. Step 3, next one here, BHP. Yeah, this one's good. This is barely a pullback here, so I wouldn't say that's rule 1 being met. It's not rule 2, it's not rule 3, and it's not rule 4. So all 4 steps are looking strong to me. All right, so there we are. So all okay for now. There's 2 or 3 there that you just want to keep a close eye on. All right, in terms of the overall portfolio, so if you watch list average for the entire portfolio, all right, you're not going to get a buy, hold, sell rating for the portfolio, all right, because that's done at an individual stock level. But certainly from a overall portfolio perspective, let's zoom it in. Debatable as to whether that's step one's being met. I'd say not. It's just having a bit of a healthy sort of breather. So no, step one, nothing to be worried about just yet for step two. Step three, RT still way above one. All right, I can't tell you the buy, hold, sell rating. But so this one here, the overall portfolio is still very healthy. Right, there it is. Okay, so that's how I'm going to manage it each and every day. Just come in and double check the 4 steps. All right, there we go. And you have just mastered the art of finding some good quality stocks. You've just mastered the art of knowing when to sell. And you've mastered the art of polishing up your fundamentals and your technicals. Okay. So I hope that helps. You know, see how quick and easy that is to do. So if you're new and you're coming in looking at the first time to VectorVest, build yourself a watch list. Right? Plug in all your stocks. It doesn't matter whether you own them or have owned them or wanting to own them. Just put them in and run through that analysis again. So remember, let's just do a quick recap on it, right? So remember what I said, the first step there, and we'll do it from the audience list here. Let's do it again. RT. So populate your list, get in here, RT, anything below 1. All right, so there we go. We'll just do a quick recap on how we did it. Select them all, that's below 1, out they go. You're polishing up your technicals. Next step. There, what we did is we had a look at growth rate. All right, I don't want to hold on to any companies that have negative earnings growth rate outlooks because this can impact the earnings. Take them out. All right, so there you go. You can always consider buying them back in when the growth rates turn. All right, so growth rates out. And then just for added extra measure, you don't have to do this, but I wanted to do this. I just said to myself, anything where the RS is below 1, I can always buy in when the RSs turn around. And that's it. That's how we got to it. All right, and then managing them individually. Remember that, just the 4 steps. How do you do the 4 steps? Graph layouts, VectorVest layout, right? Price and direction going against you would be step 1. Through the 40-day moving average would be step 2. RT going below 1 would be step 3. And the 4th and final step is when rec equals sell. That's only when you would be looking to get out. All right, just with that said, and I'll get in and answer your questions now. I want to bring up the story of AMP, and I brought this up last time too when we ran the Stock Health Clinic. Look at the stock here. All right, it was up at $5, it's now $1.70. Okay, how do we avoid this happening to us? This doesn't have to be you. You don't have to be that person that bought in at $5 or $6 and now is nursing the stock at $1.70. How depressing. It does not have to happen to you, and this is how I'm going to teach you for that not to happen. So let's say we'd bought in here and we start to see this taking place. All right, so here we are, VectorVest layout. We've got the VectorVest layout. Let's follow the 4 steps. All right, it's fair to say if you bought around about here and it's done this, step 1 is well and truly being met. Your direction's going against you, it's not performing, it's frustrating and upsetting to see that happen. Why do you have to stick it out? All right, that's the beauty of owning stocks. You can part ways quite quickly in a couple of seconds. All right, so price and direction going against you. Let's zoom it in a bit. Let's just pretend we're here. All right, so you're seeing price and direction from a longer perspective. Over here it wasn't. All right, so maybe you say, oh, well, you know what, I'll wipe the slate clean. I'll start again from scratch in the 4 steps. All right, so let's go along. Price goes up, hits a high point. Oh, hang on, you know, I'm glad I stuck it out. And then you start seeing this. Uh-oh. And around about here you say, whoa. You know, it's starting to really pull away now. All right, let's run through the 4 steps. Step 1, yes, price gone against you. Step 2, through the 40-day. Step 3, RT below 1. Step 4, rec equals sell. Around about 480, get out. Why are you looking to remain in that stock? Now, let me ask you this question. Let's say you sold out here and you're feeling a bit sort of frustrated, saying, well, you know, I thought my broker told me this was a good stock, and why don't I hold on to it? Maybe I should have. It's probably going to come back up to $10. You know, at this point in time, we've just sold out, right? Often investors have, you know, seller's remorse. Well, maybe I should have hung on to it a bit more. Let me put your mind at rest as to why it's a smart decision, and you can do this with your stocks going forward. Answer me this question here. If I put on the earnings, right? What was starting to happen to the earnings? Earnings gone up, then that started to come off. Here's the 4 steps being met. Let's roll it forward a little bit in time. What's starting to happen to the earnings here? Right? They're starting to fall away, right? What's starting to happen to the technicals? Looking pretty anemic, right? Forget the technicals for now. Now you've sold out. Now you're looking to get back in potentially because you've got seller's remorse. Ask yourself this question from that point onwards here where you sold. Did the earnings ever really come back up again? No. And if the earnings have never really come back up again, do you expect the share price to come back up again? We know time and time again, rising earnings, rising share price. Falling earnings, falling share price. Right? It's as simple as that. Just keep it simple. Right? You would not have bought back in. You're not looking to buy back in until the earnings start to turn around. Compare this to Fortescue Metals, our top one, right? That we looked at earlier. Right? Here's Fortescue Metals. Right? Rising earnings, rising share price. Okay, so keep it nice and simple. Now there is one last thing, but I'm not going to spend a lot of time on this. If I go to graphs and I click on market timing, we advocate the following at VectorVest. I'll put these confirm signals on. We buy in a rising market. So this is where we're noting the overall market's going up. Right, so if you buy those good quality stocks with rising earnings and the technicals lighting up in a rising market, right, you're putting all the odds in your favor. You've got rising market, you've got good fundamentals, you've got good technicals. Right, so go back, if you get a chance, go and have a look. Just by default, even pretty average stocks in a rising market will go up. Have a look what happened to stocks here when the market was being sold down heavily. All right, so if you get a chance with your stocks that you whittle down using this great exercise, once you've whittled it down to the key stocks, then go and buy them in a rising market. And you'd use VectorVest for your time signals. So this is where you would then buy into that portfolio. There you wouldn't buy any more. If you're stopped out, that's when you continue your portfolio again. All right, so you use those market timing signals in combination with your fundamental and technical analysis that I've just taught you to do on your watch list. All right, so there it is. I hope that makes it really easy for you there. Those steps I've shown you today, it does not have to take you a long time. Okay, so I hope you got a lot out of that. Now, as promised, I have got some great things on here, and then I'll get in and answer all the questions. And let's just bring this up. If I just minimize this for a second, I'll jump to an important set of links for you. Okay, first thing here. If you like what you've seen today and you want to trial it out, you know, my strongest suggestion to you is when you first load up VectorVest, right, so you set up your password, you log in and you get going, go and do that watch list exercise that I've just shown you today. If you get stuck, don't worry, call our team. 1-800-303-782. That's for Australia toll free. If you're living outside of Australia, look up our international numbers, VectorVest.com on the website, and then click on contact us. And we've got a whole lot of international numbers for around the world. But for those of you in Australia, 1-800-303-782. Get the team to do the exercise with you. So look, you know, I'd like you to help me do the exercise that Russell did, Russell Markham, your Director of Education for Australia, the exercise where he populated a watch list and then refined the watch list down to a handful of stocks where the fundamentals and technicals were stacking up. Get the team to do it. They're happy to spend a bit of time with you on the phone and help you do that. All right. So you might have a whole lot of shares you're not sure about. Do that exercise. I reckon it's one of the most valuable exercises in VectorVest. All right. In order to do that, you've got 30 days. We'll give you 30 days for $10 US. Call it 13 Australian or 14 Australian dollars. All right. It's barely lunch these days, right? A cup of coffee and a donut. All right, and maybe $1 or $2 spare after that, right? So what I'm going to give you for $10 is better than any a basic lunch you'll have, right? I'm not just wanting to teach you the exercise I've shown you today, so it's a one-off. This is something you can do time and time again, and not just for Australia. So if you're looking to do stocks for America, Europe, Canada, UK, you can do the exact same exercise, right? So there is vectorvest.com.au/stock health clinic, SHC. So there it is. If you want to jot that down, vectorvest.com.au, don't forget the .au/SHC, stock health clinic. I'll show you what it looks like. So once you've hopped along to that link, where is it now? I just need to bring it up. I'll just need to minimize this, I believe. I've got a few windows open here, so let's just make sure I get you the correct one. But yeah, once you bring up SHC, I'll just, in fact, let me fire it up. I'll need to open up another window here. So it's vectorvest.com.au/SHC. Here we go. Stock Health Clinic. If I typed in correctly, it might just be quicker to go from my slide and then bring it up. All right, so bear with me. It's a 5G report. It's firing it up. I'll bring that over shortly. I'm just going to the other one here. All right, per that link I've just given you. Connecting, here we go. And there we are. Okay, so vectorvest.com.au/SHC, and it'll go here. So you can put in all your details and get yourself set up. And for $10, you get access to VectorVest immediately. All right. So there's that one I wanted to leave you with. The other one I wanted to leave you with, as promised at the start, I want to give you access to a 5G stock report. All right. There's a big revolution going on at the moment. You might not be aware of it, but when we went from 3G to 4G, it was pretty big. It wasn't as groundbreaking as it could have been, because 4G was still a little bit flawed. There were certain spots in Australia that weren't quite getting the 4G speeds promised, and the technology was a little bit sort of disappointing in some areas, right? I don't think this is going to be the case with 5G. 5G is going to be a massive jump from 4G, much bigger jump than what it was from 3G. All right, so don't take my word for it. Just have a look at what reputable sources from around the world are writing up about. So we got to work at VectorVest. Like I noted there, it took over 20 odd hours to put together. So once you go to that link, vectorvest.com.au/, at the end I'll give you all the links to 5G clinic. All right, so there it is. It'll then fire this up for you. It'll default to this link, and then from there you can get the report. All right, so you just click on get the report, put your email address, confirm your email address, and we'll send it to you. Okay, so if you get the chance and you're interested in 5G, check that link out. Okay, so I wanted to share that with you. All right, let's jump back into VectorVest. And what I'll do too, here's a little bit of extra I'm going to throw in as well for a bit of fun as well. Next year, early next year, I've got it proposed first week of February, so keep your eyes peeled for when the announcements go out. We're going to go and do the exact same exercise, but for America. All right, so here I've got USA, for example, loaded up. We'll do the exact same exercise for America. All right, I'll give you a sneak peek as to one stock where it really jumps out. We've all heard of Microsoft, right? MSFT. Have a look at this one here. Let's go to graph layouts, VectorVest simple. And let's just do this. Keep it real simple to begin with. Have a look at this from a 10-year price perspective, right? Tell me, what do the earnings look like over 10 years? Pretty rock solid, right? And in recent times, what are the technicals doing, right? Technicals been above 1 for quite some time. They're having a little bit of a breather, but right, so your fundamentals and technicals are jumping out big time. So we're going to do the same exercise in America. So we've got 8,000 plus stocks for America. So we'll have a lot of fun. I'm sure a lot of you will have plenty of stocks to give us to analyze. I wouldn't be surprised the watch list is over 200 stocks, from which we'll then do the exercise in early February. Okay, so with that said, I hope you've enjoyed it. I'm going to now answer all the questions. Just before I do so, for those of you that need to get going, I don't want to hold you up. If you need to get going now, all good. Right, you might just want to quickly jot down. So they're the key links, and then I'm going to answer all of the questions. All right, Mark from UK notes, at It's at the time when we started presenting, it was 11 p.m. at night. Wow, talk about dedication. Thanks, that Mark. It's now just past midnight. We've just gone on for an hour. So if you're still with us, credit to you, sir. All right, so with that said, let's get into our questions. So hopefully you've had enough chance now to jot those down. There's the 5G link, vectorvest.com.au/5G clinic. It can all be lowercase. You don't have to make any of these upper or lower cases. All right, and vectorvest.com.au/SHC for the trial to VectorVest. Special link there. All right, so let's jump back into VectorVest and let's get into the questions. All right, so question coming in here. David asks, we bought CSL at $5. If we sell now, we have to pay tax on profits. So whatever we replace with has to gain 50% just to get back to where we sold CSL. Does tax become an issue? David, look, I've got to be careful here because I don't want to be seen to be giving advice and not licensed to give advice. Please do speak to your financial professional. But my take has always been, and I was a financial planner many moons ago. I'm no longer a financial planner. So just with that said, full disclosure, I was an advisor years ago. I'm not licensed anymore. So please, do speak to someone who's more up to date with their financials. But purely using VectorVest the way I do it, I'm not prepared, me personally, for myself. Let's put the camera back at me so you can see me. Look, I'm not whip, and looks like my camera's gone a little bit awry, so bear with me. I'll just fix it up just a tad there. It should hopefully not be as crackly. All right. Me personally, I would rather pay some tax and lock in some good profit, rather than say watch your share go from $15 down to, I don't know, $2 or $3. All right, I might end up paying less tax, or in some cases get a tax credit because there's a loss. All right, I treat each investment as a standalone entity as such, and do not take into account the tax. Now that's just me. That might be totally wrong for your circumstances. So again, I can't comment from a personal financial perspective. But for myself personally, how many times have I held on to stock saying, "Oh, I don't want to sell it because I'll be taxed," only then to go, hang on, it's no longer I'm no longer going to be taxed. I'm now going to actually get a tax credit because I've turned the profit into a loss. Right, but that's just me. Again, you'd need to chat to your financial advisor. Now with CSL, if I put CSL into this list and have a look, it's one of the biggest companies. I think the second biggest market cap in Australia. All right, so it's not like you've bought a penny horror that could drop out of the sky, but never say never for anything, right? All I'm saying is just be careful. The earnings are declining. It's actually held up remarkably well considering just how much the earnings are under pressure. You've got your price here, 330. It's come down to 289. If those earnings continue to fall, CSL will continue to fall in price. It's just how it works. Sometimes it might defy it for a wee while, but you can't keep having a company have falling earnings. Look at the case of BHP, our big mining company, right? For those of you dialing in internationally, BHP's had a very interesting history. So it's a textbook example of earnings changing, right? So change in fortunes and earnings. Let's have a look here. So over time, it might be a wee bit difficult to see. Let's just see if I can make the style jump out a bit more. No, not quite. It's because I've pulled it so far back in time, but I know it's a little bit difficult to see, but there we are. I think there we go. No, not quite. Okay. But have a look, right? Falling earnings, falling share price. This is a big blue chip stored company, right? So it's one of the biggest mining companies in the world. It went from $44 all the way down to the horrors of $17. It halved in price. The earnings just kept dragging down it went. Then the earnings turned. So the price was around about 25. Earnings kept going up and up. Now we can zoom it in and make it a little bit easier on the eye. All right, the earnings then turn around at 25, and now it's back up to 41. Okay, so I'm just saying, you look at history repeating again. I don't know. I can't tell you how fast CSL's earnings are going to go. I just don't know. But if those earnings continue to fall, you need to be aware that that's likely to be the case potentially, right? Okay. I can't remember, was BHP in that list? Let's see, it's RT, it was above 1 RS. Yep, Vest. Yep, I think that, yeah, that was in the list. That was one of our 6. Yeah, 6 ones, 6th one there. All right. So thanks for that question there. Let's see. Kerry asks, my income portfolio chose NAC. However, this analysis is eliminated. What approach should I take? RE the portfolio to apply the 4 steps. All right. So your portfolio chose NAC. So let's bring it in. Right. So the analysis that we've done today, NAC. There we are. Graph the given company. Okay. I like the fact that the earnings are popping up. All right, so the earnings are coming up. Why did we eliminate it? Because the RS was below 1. I was being strict there, Kerry. All right, because you know, at the end of the day, being a health clinic, I'm going to teach you the you know, the best possible way to find stocks. I'm being very conservative, right? Let me just do this so I'm not in your way. Transmission, there we are. It should be full screen without me on there. I like the fact that the earnings are gone pop. Good. But you'll see the reason why I eliminated it to begin with is because RS, the RS score, our parameter, capital appreciation RS, right? Because RS had come under pressure. Actually, yeah, so just don't be fooled by the profile. Look at the actual number, it's below 1. All right, so your RS had been below 1. So I was being very strict. Companies that don't have as strong a set of financials tend to be a little bit more volatile. So you'll see that, you know, this one here, hasn't got a long track record either. Well, it's not too bad, but just on 4 years. But you can, if you look at it over a longer time period, and we picked that up on the RS being below 1, this company hasn't exactly knocked the lights out. It's been a pretty bad performer for quite some time. You know, it went hit the lows here of 60 cents at one stage, having hit a high of $1.20, so it halved in price. But in recent times, if you're more aggressive, yeah, you know, great, big pop in the earnings, financials starting to pick up, but this does not meet my conservative criteria. I'd like an RS score of at least 1. But from a dividend perspective, why is it popping up from a dividend? Wow, look at that 5% dividend yield. Okay, great. This company's paying whopping dividends at the moment. It's good now. But spare a thought for those that were in this company 2 or 3 years ago, right? They're not exactly feeling all that happy. It's barely gone anyway, right? So personally, for me, I would rather have something that's got a much more proven track record on its earnings. You know, here it leaves a question mark. You know, why did that happen? Could that happen again? All right. So yes, you're getting a high dividend, but I'd have to say you're taking on a wee bit of risk based on historical earnings. Okay, it's up to you. If you don't mind that one in your portfolio, just make sure you're following the 4 steps. Oh, sorry, and your other question was applying the 4 steps. Yeah, you know, apply the 4 steps as we talked today. All right, so if I fire that up again, all right, so graph layouts, remember this, the VectorVest layout. So apply your 4 steps. Right, it's looking pretty good. Step 1, price and direction. Is it going against you and getting volatile? Debatable. It has had a bit of a breather. So let's say no for step 1. It's borderlines getting there, but definitely step 2 through the 40-day moving average. Step 3, RT is not below 1 and rec equals hold, it's not sell. So no, but if this keeps going, then definitely step 1's being met. You can argue as to whether it has or has not. Say it's borderline. Let's say it is. So that's step 1 and step 2 are being met, but not 3 and not 4. But if this keeps going and RT then breaks below 1, then you know you've got 3 steps and you want to start being careful. You've got a bit of room yet at 1.25. Okay. All right, so I'll take that one out. Thanks for that question. Tony asks, how do you get the buy signals on the market timing graph, please? All right, yeah, good question. All right, so Tony, the quickest way, if you're new to VectorVest, the quickest way, I did it this way, where I went to graphs. All right, so I went to graphs. This is your standard default when you go there, and I click on stock and I go to market timing. And from here, I put on our most conservative timing signals being the confirm calls. All right, that's the way I did it. Now, there's an easier way. So forget that. So let's say you're in your views and you want to look at market timing. There we are, timing tab. And just click on the market timing graph. So there, graph. It'll open up in a separate window. There it is again. And you can put on your confirm signals. Okay, whichever way you prefer. Okay, both are good ways to do it. This is probably the quickest way. Just click on timing, market time graph. There it is. Okay. Let's see. So coming in here, someone's noting screen is locked up again, has it? Anyone confirm on GoToWebinar, are you getting a screen lock up? I'm seeing it on the transmission side of things here that it's working, Gail. Sometimes what works well is to log off and log back in, and it'll fire it back up again. It might have just locked up temporarily on your side. Hopefully, fingers crossed, it's firing up again. But no, certainly I can see transmissions running live. Okay, so that pretty much wraps it up. I hope you got a lot out of this. Did you like what you saw here? Can you see how easy it is to do? And let us know in the chat box. Is it fun? I love doing this. And you know what? By doing this, you're doing top-end fundamental and technical analysis. And guess what? You're not suffering looking at endless financial statements until your eyes start going square on a computer screen, and dreading the thought of doing it, not really knowing what you're looking for. I don't know about you, but when I look at financial statements, is it just me? But over the years, they seem to become more and more complicated. The CFOs and the accounting staff seem to find more creative and fancy ways of hiding things. You almost have to become like a forensic analyst, looking for the notes. Refer to note number 65 in fine print page 487. You go there, and then it refers you onto another note and another note. It seems to be difficult to sort of follow financial statements, at least from when I first started looking at them. They seem to become more and more cryptic as time goes on. That always makes me suspicious. I always think to myself, what are you guys trying to hide? All right, VectorVest just shines a light on it. I don't have to spend days and months suffering with my financials. I just go and find them all, and then I look at the net effect. I can't do that looking at individual stocks. Here is the net effect. There is the net effect of what we whittled it down to. Technicals are going up on average. Earnings are going up on average. I'm feeling good. All right, I'm starting to put that all in one spot. All right, yeah, a lot of you are saying, yeah, easy to follow. Notes, excellent system, easy to use. Notes, Tony, that's what we like to hear, Tony. The idea behind the stock clinic is not to bamboozle you with endless jargon and technical terms. I just want to show you guys how to make money. That's the whole idea behind the clinic. If you want more of the nuts and bolts, as noted earlier, hop onto the VectorVest YouTube channel. All right, so the VectorVest YouTube channel, and go and have a look at when we first ran the clinic. There I started to pull it into a lot more nuts and bolts, but based on the feedback and based on my gut feel, I thought, well, hang on, maybe I've done a disservice to people that I knew. It was probably a little bit too much. So this time around, I've decided, you know what, let's make it nice and simple. So hope you see how easy it is to use as well. If you get a chance and you become a subscriber or you're a trialist to VectorVest and you take out a trial, go and do the same exercise in Europe, UK, America, Canada. You know what? You don't have to be an expert in those countries. You just have to follow this process, and believe you me, you will build some amazing portfolios and become stock wizards in those countries. Once you understand one system, you understand them all. All right, it's as simple as that. All right, so with that said, let me just clean up my camera here. There we are. It's a bit crackly again. There we are. It should be coming through clean. Nice and clean. Thank you for coming along. I will now revert it back to the slide sets. All right, with those links for you. So let me look in the camera here. So thank you, and I'll leave you with the links. Keep yourself tuned, because I'll come back in early February. I've got it scheduled for Friday, the 5th of February. I didn't want to do it in January because I know a lot of people are traveling away with holidays and all that type of thing. So I thought, well, by first week of February, most people should be back by then. And due to popular demand from Australia, a lot of people saying, Russell, can you do the same exercise for the United States? No problem. We'll make that happen. All right, so let's wrap it up. I will now, where is my screen? I've got to bring back the links. Aha, that's the one I'm after. Okay, so I'll leave you with that for those of you that wanted the link. All right, well, thanks again, everybody. Have a great weekend. I'll turn off the transmission on YouTube very shortly, and I'll turn off the transmission on GoToWebinar. I'll just give you a couple of seconds there. Just jot those down if that's what you're after. VectorVest.com.au/SHC stands for Stock Health Clinic. It'll give you access for 30 days for your 10 US dollars. And for those of you that want the 5G report stocks, the one that took over 20 hours to put together, there it is, vectorvest.com.au/5G clinic. It doesn't matter if it's all lowercase, you don't have to put anything up or lowercase. vectorvest.com.au/5G clinic. All right, so with the power of technology, I'm just about to turn off. Hopefully you've all got what you need there per those links. I'm just about to turn that off. All right, thanks again. I'm just about to flick the switch, lights out. All right, so thank you for coming along, and look forward to seeing you in early February for the US stocks. All right, bye for now.